Hi there, you're watching BQ Prime. GDP growth, FDI inflows, FPI outflows, employment data, inflation, trade deficit. As India marks 75 years of independence, there's another significant marker to assess our country's growth on: the legal framework and policy approach to facilitating growth and attracting investments. To share his views on how India has fared on this aspect and what should be the policymakers' approach and focus going forward, I'm joined by Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. Mr. Shroff, welcome to BQ Prime. In the last 75 years, we've set up the basic legal structure that governs economic activities in this country. We've brought in, based on the demands of time, we've brought in new laws, repealed old ones, set up new regulatory structures, given them enforcement powers. You've been part of, several of these changes in the capacity of as an advisor both to the government and businesses. How have you seen the approach to policy making evolve in your experience?
So, firstly, Paswini, thank you so much for having me on this show. I personally also feel very strongly about this theme of India at 75 and the journey ahead. So, I feel very invested in this journey as an Indian as well. Now, you're asking me to take a sweep of 75 years in terms of how policy and rulemaking has evolved over 75 years. So let me step back and take a kind of a macro view of this journey. Firstly, I think a lot has changed, as you would expect in a dynamic country like India over the 75 years period. But let me boil it down to just three trends first. The first clear trend is that we moved away from the Nehruvian socialism of the early years after independence to what is now largely a sort of a more market-based economy. And I think a lot of the rule making and policy making has evolved to accommodate this reality, and that carries a number of kind of nuances as well. I think we've moved away also as a consequence of this from a much more relationship based system to a more rule based system. It's still work in progress because a lot has to be done and the rules need to be clear as well. But it's like moving a super tanker. You
Yeah.
move it, degree by degree. You can't just turn it on its axis. So this is one big change. We saw the first in more recent times. We saw the first big move in '91 in the Narasimha Rao Manmohan Singh sort of reforms, where that first change of when we actually deeply recognized the deficiencies of the earlier system and moved away to a more market-based. I won't use the word capitalist, but a more market-based system where private entrepreneurship was to be given effectively a chance. So that was and then what followed thereafter, I think, is history, and what you see of modern India in terms of the economy today. I think it can trace it back to that point of time. We are seeing the second generation of reforms as well, and I think the most prominent example of that, I would think, was IBC,
Right.
where we kind of turned the past concept on its head and brought in perhaps raw capitalism, where you could have corporations or businesses fail and the market forces took over, as opposed to just somehow trying to keep them alive. And I think also recognize the reality that promoters or whatever name you want to call them have no divine right to sort of govern, and consequently you created a market for corporate control. I mean, we had the takeover code and hostile offer, all of that when the equity markets was there, but the first birth of the control of corporate control market was really created, I think, in IBC. So these are the two kind of milestones which personify this journey. There have been many other nuances and versions to this fundamental move away from a socialist, a Nehruvian socialist model to what I would call a market-based model. The second broad trend, I would say, is that we have become much more responsive to feedback. Uh, all governments have an ego about policy or regulation that they bring in, but you also see examples where if there is strong enough feedback, even legislation is rolled back. Not to be political, but both the farm laws as well as the private, this personal data protection bill, the rollback of it is proof that if the market has kind of rejected a certain concept, that it is better to roll back and do some, take a fresh crack at it rather than just get stuck on ego and continue with it. And the third, it's still early days, but I'm seeing green shoots of it, is that India is becoming a rule maker rather than a rule taker, even in terms of global issues like crypto, for example, or many of the other issues which affect kind of global policy as well. So I think we are getting confidence in our stride of being able to actually lead a conversation globally rather than only वहाँ अमेरिका में क्या हो रहा है और इंग्लैंड में क्या हो रहा है and then quickly copy it. I think we are getting that confidence to set the design
based on our market
based on
reality.
our market and without worrying too much about what will the world think.
Right. I will sort of take, another, let's say, look at the journey before we talk about what next and, the focus areas going forward. There have been instances in policy making which have had unintended consequences.
Yes.
If I can use some illustrations, which have been very, again, polarizing. Demon was for one, for instance. Then there was, the retrospective tax, or in the way we sort of gave out natural resources. To your mind, what are those decisions that you have seen hit businesses adversely the most?
So, again, talking of a 75 year, we're taking a recap of 75 years. And I would actually prefer to, approach this question on how do you make policy with minimum unintended consequences. I prefer to look at it in a more positive note. But having said that, and without being kind of an apologist for any government of the day, I think you have to recognize that over this period, all governments make mistakes, and that's okay, because no government is perfect, especially when you're dealing with such a complex country and legal system. So and the fault could lie in any political system because of a number of reasons. One is there could have probably been inadequate consultation, or the problem could be on execution. The problem could have been on drafting as well. So taking a more general view again, I think these are typically the causes which lead to unintended consequences as well. And so long as the policymakers, whether it be government or regulators, are willing to learn from that, and I see enough evidence that we are learning from that, I think it's okay. And obviously, even going forward, as we continue to evolve and we want to grow fast, we will make new mistakes and there will be unintended consequences. But so long as there is no bad intent behind it, I think it's okay. I mean, as I look at the world, and I travel a lot, as you know, and I look at it, people are admiring India. We are, as one of my clients said, you're the last oasis of hope in the world today. We are one of the few bright spots. So let's not beat ourselves up too much.
Okay. You, in your opening remarks, Mr. Shroff, you spoke about how the relationship of the promoters in this country and, let's say, the other stakeholders have sort of changed because of what you call a landmark sort of watershed moment in the form of insolvency. What are those? How have those conversations changed now? How are promoters, let's say, behaving differently? And I ask this because last year was a record year for unicorns in India. And we see a lot of entrepreneurs who came successfully out of debuting on the markets. Yet we continue to see that entitlement from a lot of promoters with 4%, with 6%, with not even being categorized in the promoter group. But the DNA of entitlement that, hey, look, I have built it, and at 4 or 5%, it should be me running the things and me who's, the karta dharta of this company, in spite of private equity and institutional capital. Do you think that it's the same problem in a different, newer form?
So I think firstly we're talking of two very different things. I think the changes in the mindset of, if I can call them, the old world
Yeah.
promoter, which was turned on its head because of IBC, is a different problem statement from the one that you just outlined now, in terms of the kind of new age entrepreneur at relatively low levels of equity, still
But
not
yet,
accepting the
yeah,
fact
yeah.
that there are a number of other equally big, if not larger, stakeholders that are involved. So I think the first problem of the, if I can call it, the old economy promoter was a sense of entitlement, and also it was an arbitrage on our legal system, that I can drag on this forever. I can always find some way of continuing this in courts for 15, 20, 30 years, and never be out of management. So the ability to play the system and play the institutions was very high. That has come down kind of dramatically. So the earlier notion, or at least in belief in some parts of the private sector, that this is a loan, I don't have to repay it back. The repayment is optional. That no longer exists today. You can lose control, and you will lose control of your business if you don't honor these contracts. So this is problem statement number one, and let's put it to the side for a second. The problem of the new age entrepreneur, I think, is a very different one. I think it firstly starts with a very defective and skewed capital table. The cap table is the root of the problem, because at the early stage when they were setting up, they've given away so much
So much
equity
equity. Yeah.
without realizing what they're doing. This can link back to the fact that there is no real, venture debt finance that is available, and the emotional realization, somewhere along the line, that I've actually got very little level of influence because of the low percentage that I'm holding. People have taken time to come to terms with that, and there are several examples. I won't
Yeah.
take any names, but we see that. So it is essentially a governance problem. I see what we are seeing in kind of the new age startup economy, and the mentality of they come with, where governance, principles, and the kind of ethics of being a manager in that sense are not very clear. So that's a very different problem, and there are
No,
no.
that sense of entitlement, as we sort of see them speak and behave, seems to continue. It's just very little they can do about it given their, let's say, ownership
Yeah, and I think first they've
status.
got to emotionally accept that they are a minority stakeholder,
Yeah.
and that there are many other stakeholders with larger financial interests. That is, they have, most of them haven't accepted that.
Yeah.
That is the problem.
And I mean, were you equally perturbed as a lot of people with how the valuations were going on the last year round
So
where,
if you go back in history, you'll find so many bubbles. The dot-com bubble was one example of that. What this is, some form of bubble only,
okay.
in terms of what how we saw and how
And
they came
that sort
off,
of,
and it is for a 25, 30-year-old guy who is probably not seen one or two economic downturns. It's very easy to get away carried away, where from nothing you suddenly find $100 million floating around in your bank account. So there is actually another institutional deficiency in the lack of mentorship for such young entrepreneurs.
so just keeping the conversation more current from last year to now, I has, let's say, the euphoria from the investor
It's coming
side.
down. There is
Yeah.
a significant kind of correction that has already taken, because funding firstly has become very difficult.
Yeah.
It has dried up. Whether it's PE or VC, I think it's now much harder to get money out of the system. Market, I mean, just IPO valuations at for kind of the new age economies has also become. It's possible to do it, but it has become far more challenging as well. So reality has hit, and it is work in progress.
Yeah. Um, Mr. Shroff, so we've sort of talked a little bit about the journey so far, but we also want to talk about the beyond, and that's the focus area, which will take us hopefully to the $5 trillion economy. To your mind, and there are a variety of things that we need to fix, right? From infrastructure to approach to investments to the certainty to dispute resolution. What, to your mind, would be the couple of focus areas that you would like to see policymakers work on?
So there are kind of two data points. One is the 2025 $5 trillion economy
Yeah.
goal, and then there is this broader conversation of Amrit Kal
Yeah.
at India 2047. being discussed as well. And I think it's actually quite amazing when you look around the major economies that there is any leadership that is talking of 25 years. Show me one nation that is talking of trying to predict themselves 25 years into the future. Now, granted that 25 years is a long period of time and a lot will change in between, but the fact that we are dreaming as a nation of a larger kind of ambition and a place in the global marketplace, I think firstly is kind of amazing, and it is very inspiring for say the younger generation today. I mean, the fact that you can have a conversation about 25 years from now itself is terrific. Now many things are required. We are not going to, it's not something which is inevitable.
Yeah.
There could be many roadblocks on the way, but it finally, I think it comes down to a few basics. You have to create that environment where it's essentially a meritocracy, where private entrepreneurship will thrive, but will also be balanced by more public interest elements as well. Because you don't want a concentration of where it's there will be large deprived elements of society as well. So what are these basics? I think firstly, to my mind, and not just because of my profession, I think the rule of law is probably the most important one. It is the most important piece of infrastructure that a country can have. And rule of law, I don't mean as confined only to better dispute resolution system. There is just one element of it.
Hmm.
Better legislation,
Hmm.
clearer legislation, well thought out in terms of economic, goes back to the point that we discussed of, have you done a proper impact assessment of what will be the impact of a legislation that you're introducing? So better legislation, better dispute resolution, more sensitive rule making at a delegated level as well. There was a very interesting piece in one of the newspapers a few days back. I forget the name of the author, of where there is effectively an implicit contest between the judiciary and the bureaucracy in terms of whose word is final. And I think India's constitution has been built on the notion that the judiciary's word is final. You cannot have a situation where in a democracy like India, you'll end up with the bureaucracy thinking that they are superior to the judiciary, and that's a mindset issue. I mean, of course, if the judiciary passes an order, everybody will have to comply with it. But the mentality of coming to it is that who is the final authority? I think we have to respect that the rule of law has certain basics about it. So I think if we get our rule of law right, that would be condition number one. And I don't see this 25-year journey happening without a very robust rule of law. And as I said, that's not just because I'm a lawyer. I think the world will agree. The second, I think, in terms of policy and legislation or whatever form of legal instrument, it has to be more trust based. There is a implicit distrust in a lot of our legislation that it's almost like sub chore.
Hmm.
You cannot take the country from now till 2047 on the assumption of sub chore. You have to, I think, have a higher level of trust in your citizens. There will be black sheep, there will be bad apples, deal with them. So just now we are premised on the policy making. A lot of it is on increasing the cost of compliance and reducing the cost, or not doing much to the cost of non-compliance. I think we should turn it on its head. The direction that we need to take should be about reducing the cost of compliance and increasing the cost of non-compliance.
Yeah. I have a question because it's a piece of legislation that a lot of players in the market have been waiting for, especially those who give utmost importance to the concepts like privacy or data protection. So we had the Companies Act, and we in 2013 Companies Act, and we course corrected, we made amendments. So the industry said, hey, look, there are too many changes to keep up with. Um Similarly with GST, we had circular after circular. We had that in IBC. One way to look at it is, hey, look, the government is listening and responding to what the commercial reality is and course correcting. With personal data protection bill in the last, it was what tabled in 2019. We've not been able to with the hurry that we committed to the Supreme Court during the Aadhaar hearings, that yes, we've been working on this law, and it'll be out soon. We've had several versions of it. We've had a committee. There's been a JPC which has deposed all sorts of stakeholders in the process, and now we've withdrawn that. We have no idea, no clue if the final framework will look like what the JPC has suggested, or the government will go or stick to its thinking that's was there in its version. Between the two, has the government or the policymakers today gone like, hey, look, we need to get the first version 99% right. So if it takes for us as long as it takes, we're going to do it, versus a situation where you at least make a start, see how the stakeholders are adjusting, be consultative along the way, incorporate that feedback. Is there, with this specific piece of legislation, a change in approach from what we saw earlier with other commercial or economic legislations?
So I don't want to go into the kind of unfortunate history of this law, and I would look forward with some hope in terms of whatever is the new version that comes up. But what is the problem? I think the problem is that after the Supreme Court hearing, we were trying to give ourselves a privacy law or a data protection law. What is now going in the direction which it is going is we're trying to give ourselves something much broader, almost in the form of a Digital Business Act, which covers privacy, of course, there, and data protection is there, but there is so much more as well. So I think there is a little bit of trying to achieve multiple objectives through the same mechanism, and in that process, unless we come up with something really brilliant in terms of how comprehensive it is, there is a high risk of making missteps as well. So this is another example of where we are moving away from simplicity of purpose into we are trying to boil the ocean here.
Yeah. No, I mean, the purpose is slightly scattered to my mind, Mr. Shroff, because you want to do personal data protection, you also want to bring in non-personal anonymized data.
Maybe you do multiple legislations to kind of fix this, but एक तीर से कितने भी you're trying to hit so many targets. I think it's going to be very challenging.
So you've outlined the principles that you'd like to see the government or the policymakers take in the next decade or so. In your conversations with investors and your clients, domestic or foreign, in the context of India, I know you said oasis of hope and all of that. Could you identify areas where they continue to feel the pain? Because whether it is judicial delays, whether it is enforcement problems, that hey, look, some district court in some state will issue an arrest warrant for a CEO or a director, those conversations or those stories or those headlines have sort of become part and parcel in the last several decades.
And people love to talk about these stories.
Yeah, but are there sort of any newer problems that you're hearing from the people you interact with, the businesses you talk to?
So I think all of the above of what you said. Plus, we continue to. I mean, the FDI framework continues to be is seen as just too complex. Now there may be pockets of it which are okay and simple, but and there are some very popular sectors where it is seen as so Byzantine in terms of its complexity that it's very hard to explain it to a foreign investor, or very often even to an Indian investor, that it's become a kind of a mind-numbing puzzle to figure out the route on some of these issues. So in terms of if I were to rate the top 3 challenges that say a foreign investor would worry about, one is of course the investment regime, FDI, FPI, whatever you want to call it. Even though we've been at it for so many years, there is always a new googly every day. So that's point number 1. Yes, I think the dispute resolution system continues to be a challenge, but on commercial contracts, people actually find a workaround by just choosing an arbitration forum, which is outside. So we effectively land up exporting our legal system, which is not a great outcome. So that is the second kind of thing. And the third, I think tax continues to be an area of tax more broadly, whether it's direct taxes or indirect taxes. We are just seen as too complex. I know it's not an easy problem, and there have been many attempts to simplify, give ourselves a new code and whatever. But if you're looking from out to in, you see this as a big wall.
So is it complex or uncertain? Which is it?
Bit of both.
Mr. Shroff, there's one area where, of course, we've made commitments at a global level. It's for listed universe. We have done some some direction in terms of mandating disclosures, BRSR. Um, how receptive do you think India Inc. is of the climate change agenda? How ESG ready our companies are? Look, the top ones are doing what they have to do because they know it's the investors asked. So some of those companies are doing it because investors are keeping them honest. Is it just at the very like top level, or how are you seeing people approach
So
it?
ESG is one of my favorite topics. So my take on this is that it is now becoming mainstream in corporate India. It is being seen not only as a compliance thing, which I have to just do it because there is a framework for doing it, but more importantly, it is also being seen as an opportunity.
What are some of the active choices you've seen people sort of change from earlier to now?
People are exiting businesses where there are ESG weaknesses. I think private equity investors are undergoing a kind of an investor diligence before they put money to work. So that's on the market side. And even in terms of the kind of opportunities, for example, hydrogen, and two of the biggest business houses, uh, I think they're out to solve the country's problem just on their own. These two guys, just think of the scale of what they're doing. So that's opportunity, and I think they will that will result in crowding in a lot of investment, private investment as well. So if you ask me what is the readiness of India Inc., not fully ready, but very mainstream conversation. It's one of the top three topics in a boardroom today for sure.
And I mean, are you seeing companies having to take actions because of board pressure, because of investors ask, maybe make more prudent choices which are more
Definitely,
environment friendly?
definitely, and also in its own way, even the judiciary is getting involved. I think the judiciary is also starting to intervene in some of these discussions.
My final question will be on something that's just started, and at 75 years we've made a start of that ecosystem. I'm hoping to check with you how optimistic you are on, and I'm talking about the gift city efforts, because they're trying to innovate, they're trying to even launch products which don't exist worldwide. We're trying to sort of compete with some of the offshore jurisdictions. How optimistic are you that this will work, and people will sort of think of India in the same league as a Dubai or a Singapore or a Cayman?
So the as they say, the proof of the pudding is in the eating. So sign of my views on Gift City is that we've opened an office over there, and we wouldn't have done that if we were not optimistic. Second, I think there's a lot of policy initiatives coming from the IFSCA administration. They're clearly, very thoughtful and dynamic. But a financial center like that takes at least a decade to achieve, maturity. There was a very interesting piece in The Economist a few issues back on what is a financial center and how does it really international financial center and how does it get created, and all those stories are decade long stories. So we are just in the first few periods. So am I hopeful about it? Yes. Do I think that something is going to happen like a miracle in the near term? I think it's going to be slower, but I think we are moving in the right direction.
This
But
is
it's not a short term win.
it's not a short term win, and I mean, are people seeing this as a in terms of just how sure this bet is for India? Um, is it seen as a government agnostic bet?
I don't know the answer to that, but I think if you really, people are still seeing that there is an opportunity out there, which is agnostic to whoever is the government in power. There is a sufficient infrastructure that is there, and there are plans for the rest. But yeah, early days.
Okay, all right. Mr. Shroff, I will have to end on this. What's the biggest problem you're trying to solve for in this sphere that advise in for clients, whether foreign or domestic? What's the biggest problem on that sort of keeping you awake or making you think?
I think the biggest problem that our clients are trying to solve for, I think, is how to continue to grow in such an uncertain world. I mean, we are actually spoiled in India at the level of, we are talking of 7-8%
Percent,
growth.
yeah.
There's no nation on earth which is talking anything in those terms. People are talking of 1, 2, 3%. So if the size of the opportunity is so large, and how do you continue to grow in such an uncertain world, and deal with everything that is being thrown at you? That is the number one. Whether it's a private equity investor, or it's a corporate, or it's a banker, all of them are trying to deal with the broader uncertainty of so many moving parts at the same time,
For
which
the
is a lot of fun as well, because I think it challenges you intellectually all the time. But managing so much uncertainty which has never happened at the same time, geopolitics, domestic factors, COVID, post COVID, this is just too much at the same time. That is the biggest problem.
All right. I'm hoping some of that worry gets reflected in the way we are raising capital, the way we are employing capital, and the way we are attracting capital. Mr. Shroff, thank you very much for speaking with BQ on our special series. And thank you so much for watching.